Alright, for this video I wanted to go over some Form 1040 filing thresholds for self-employed persons. So I've got one slide in front of us with some of the rules on self-employed taxpayer filings, and then I've got some sample tax returns that we have in front of us to look at the examples and see how the numbers flow through, and some scenarios where you might want to file a tax return even though you might not be required to. So why does this issue arise? Well, it comes up because when we talk about Form 1040 filings, often what we hear is that, well, you don't have to file a 1040 if your income is below the standard deduction, right? So we hear, okay, John is a single filing taxpayer. He's got W-2 wages of $8,500. The standard deduction for a single filer in 2022 is $12,950. So in this case, John wouldn't have to file a tax return, right? Because he could just say, well, my income was underneath the threshold, so I don't need to file. And we can find this in the 1040 instructions. So I have the 1040 instructions in front of us here. And chart A is kind of where your starting point. So we can see here, it says, okay, if you're a single filer, you're under 65 years of age, you should file a return if your gross income is at least $12,950, right? But those are kind of the general rules, right? We're looking for the exceptions. And the exceptions kind of start in Chart C, right? So we've got Charts A, B, and C. Chart C covers situations where you need to file even if those gross income amounts didn't apply to you. And so what we want to focus on here is item 3, which is you had net earnings from self-employment of at least $400, right? And so that's the exception we want to focus on here. And why is it that threshold? Well, the relevant code sections here in the IRC are 1401 and 1402, right? So 1401 provides that you're subject to a 12.4% tax on your net self-employment income for the year. And then more specifically within 1402B, it defines self-employment earnings, or self-employment income rather, as your net earnings from self-employment derived by an individual during the year, except that it doesn't include these two following exclusions, right? So you have earnings in excess of the contribution and benefit base. And so what they mean there is, well, you're only subject to Social Security tax up to a certain threshold, right? If you make more than that, you're no longer subject to Social Security taxes. You still pay Medicare tax, but not the Social Security taxes. And then the second exclusion there is net earnings if they are less than $400, right? So what they're saying here is, look, if your net earnings from self-employment is under $400, you actually don't have any self-employment earnings or taxes. And nor will you owe any federal income tax because, again, we look back to the standard deduction. If you've got under $400 in income, the standard deduction is going to wipe it out, right? So you're not going to owe any federal income taxes either. Now let's have a look at these two examples here for John, right? So the first one, we're going to have John is unemployed, so he decides to start a side hustle business, right? He's flipping used furniture. He buys $250 worth of used furniture and sells it for $350, so his profit is $100, okay? Now, his earnings from this activity are under $400, right? So he's not going to owe any self-employment taxes, nor is he going to owe any federal income taxes because, again, the $100 in net income is well below the $12,950 standard deduction. But he still might want to file, and here's why. He has to consider things like the earned income tax credit, right? So if we look at, let's look at John's example return here. So we have John taxpayer, and if I scroll down, let me skip to his Schedule C first so you can see how we filled that out, right? So very simple Schedule C. Obviously, it's, you could have some more deductions in there perhaps, but he's got, the gross receipts there from the sale of the furniture. He's got his cost of goods sold, that's the inventory of $250, and there's his net profits of $100. Now, if we look at pages 1 and 2 of his return, there's his $100 in total income, right? So that's his AGI is $100, but then the standard deduction, again, it completely wipes it out. So $12,950, and so his taxable income for federal income tax purposes is $0. Now, if we scroll on down here to page 2, normally, if you are subject to self-employment taxes, what you'll see is a line item entered on 23. So on line 23, we have other taxes, including self-employment tax from Schedule 2. Now, John doesn't have any of these self-employment taxes because, again, his earnings are under the $400 threshold. But look at what he can do here in the payment section, right? So line 27, he's got an earned income tax credit of $10. So he actually gets a refund. He actually gets a refund here of $10 because he does have some net earned income for the year. And so why is that? Well, if we look at the publication 596, this is the publication that covers the earned income credit, who qualifies, what income qualifies, and it includes the tables, right? So it's a lengthy publication. It's about 38 pages or so, 40 pages. And so within the publication, we have the EIC tables. So if we look at the earned income here on the left-hand side, right? If it's at least $50 but less than 100, if you're a single header household or qualifying surviving spouse and you have 0 children, this is John, he gets $6, but in his case, he's got $100 exactly. So if you're 100 to 150, that's his row there. With 0 qualifying children, he gets a $10 credit there, right? So that's why when we look at his return, he's got, okay, you got no taxable income, you have no tax, no self-employment tax, but you do have some earned income, so he's got a $10 earned income credit. He gets a refund for $10. Now, whether you want to go through the trouble of filing this, again, he's not obligated to file, right? Because he doesn't meet any of those thresholds. But in this case, if he was going to go ahead and file, he could actually get a refund back from the IRS. Now, let's look at another example where John is going to have to file. So we modified a bit here. He's unemployed. He starts his side hustle business, but he sells a lot more product, right? So he over the course of the year, he bought $2,000 worth of furniture, sold all of it for $2,800. So now he's got an $800 profit. So his earnings from self-employment are over the $400, right? So he's got $800 in profit. SE earnings are over $400. So now he's got to be filing the Form 1040. And with that 1040, he needs a Schedule C and a Schedule SC. So Schedule SC for self-employment earnings and taxes. Now, John, what's he going to end up owing? Well, what we're going to see is that he owes some self-employment tax, right? This is the trigger for why he had to file the return. But he's still not going to owe any federal income tax because, again, his net earnings are going to be under the standard deduction. So standard deduction wipes out his AGI completely. He gets down to 0 taxable income, but he still has the self-employment tax obligation, and we'll see he also gets a earned income credit. So if I go back to the returns, this is the second scenario return. So here we can see here now that after John did his Schedule C, he's got $800 in Schedule C net profits, and so that's going to generate the self-employment taxes. So if we scroll down to John's self-employment worksheet, so here's his Schedule C for profit and loss from business. That's great. And what we need is here, Schedule SC for the self-employment tax. So John completes the self-employment tax worksheet, and then it computes overall his, what are his employer and employee portions of the self-employment tax, what piece is deductible. And so that's the numbers that are ultimately flowing up here to pages 1 and 2. So again, here he's got his $800 in income flowing through from Schedule C. He's got his deduction for the deductible part of the self-employment tax. That's fine. And then again, you notice here that the standard deduction completely eliminates his AGI. So that's why he's got $0 in taxable income. So when we look at lines 16 through 24 here, where we have the tax computations, no tax, right? On line 16, there is no taxes on his federal income because he has 0 taxable income for regular federal income tax purposes. But we do see the self-employment tax, right? So there's line 23, self-employment tax for $113. And then again, like the previous example, he's got an eligible earned income credit, right? So $55 on his earned income from self-employed activities, right? So again, he can go back to the publication here and reference where his earned income credit is, rather. So he's between that $700 and $750 in net earned income, and that's if you have 0 qualifying children. There's his $55 amount. So he's got the $55 in EIC, that he gets to claim on his return. So in this case, yeah, he had to file a tax return because his self-employment earnings were over 400. That's fine. He has some taxes, some self-employed taxes owed, but he does get a credit to offset those taxes. So even though he owed $113 by filing, he actually owes $58 because he has a $55 EIC amount flowing through. All right. So I hope that was helpful. If you have any questions, feel free to leave me a comment below, and I look forward to seeing you again on the next video. Thank you.